Okay, so welcome everybody. This is LD Capital. It's my YouTube channel that I'm starting out. And basically what we're gonna have for our videos is that I'm gonna be posting videos every week, and it'll basically be the market breakdown, trades taken, as well as giving you guys some educational pieces of education. I'm going to be teaching you some concepts, teaching you some psychology, teaching you about fundamental analysis as well. So with that, so let's just get into it. So I mainly trade the Euro USD on the 4 hour, the 15 minute, and the 1 minute time frames, right? And I usually trade during the London as well as the New York session. So that is pretty much what we're going to be doing on the Euro USD. So let's just go to the daily chart, right, to see the macro bias. So as you can see, I've marked out 4 quadrants here. Alright, we have Q1, Q2, Q3, and Q4 of the year for 2023, right? And we can see that from Q1 and Q2, we basically just had, daily breaks of structure to the upside, alright, creating these highs and lows as well. And in Q3, what we had was a huge pullback, alright, into during Q3 to sweep out all of these lows over here, right? I've indicated this as a sweep. It is not really a break of structure, because if you look, right, this isn't really a huge volume kind of reversal kind of thing. It looks more of just like a, just liquidity or retracement down. But anyways, so right now we're in Q4 of 2023, right? And what we see is that price actually has started a bullish rally, right, into Q4. And what I expect, at least on, for the rest of Q4, is basically for price to, retrace up back into premium prices. Alright, I've indicated this as premium prices, and this will be discount, right? So price is currently in premium prices. And I've also drawn the Fibonacci level from this high to this low. Alright, and price is basically, around almost the 0.618 level, right? So what I can expect for like the rest of Q4 is price for probably to react, somewhere in this daily supply. There are 2 daily supply zones here, one here and one here. And I expect them to, be a potential point of reversal for price, right? Because usually if you see such a huge, move in Q3, I don't really expect Q4 to be super, spectacular, like a consistent, like uptrend all the way right into Q4. I think that does make sense. So what I expect is 2 scenarios, right? So the first scenario is price reacts on the daily supply zones over here and then starts to reverse and continues back down into this, little range right here that we have, right? And then the second possibility that I can see is that price may continue up all the way to take out this high over here, alright, or this ceiling, you want to call it 1.13, right? So price comes up all the way to this point here and then just kind of like consolidates back down within this range right here, right? And maybe perhaps the other scenario is that, let's say we see price at this daily supply and price starts to reverse, maybe we'll see price just consolidate within this area as well lah. So those are the possible scenarios that we have, but we just need to bear in mind that Q4 is still bullish, right? We have these large volume candles and doesn't really show that the buying pressure has kind of like changed, right? So we're still bullish on the daily bias, right? So if you look at the 4-hour chart, pretty much, we have these highs being taken out, these highs as well being taken out. So yeah, you can see that we are pretty much bullish, and these moves are basically caused by, okay, like this is from CPI, right? And then previously this one was NFP. So the recent US economic news have been pretty, I would say, bearish for the US dollar, which is why we see Euro USD, rallying quite high. And we can expect to see that for the remaining of the, the possible coming weeks or even months, right? So that's pretty much the high time frame bias and analysis for, you know, the daily and the 4-hour chart. So I think I just want to go into like a recap of like the week, the trading week that happened from, you know, 13 November to 17 November, which was basically like the week that just passed, right? And let me just go down to the 1-hour chart maybe to simplify things. So you can see, right, that in this week, so-called this week from Monday to Friday, right, this is the start of Monday's London session, and this is the end of Friday's AM session, right? And we can see it's basically just 3 moves that happened in the week. So we had this little, you know, consolidation, liquidity building kind of thing, and then the shot up from CPI, or was it PPI? Yeah, CPI. Then after that we had just this huge ranging movement right here, right? So you can see that there weren't really much opportunities to, you know, go short or go long, unless like maybe in this area you have caught something, or maybe somewhere here also you have caught something. But pretty much this week was a bullish week. Shorts, I would say, would have been below probability. So by the ways, I'll break down some of the trades that I've taken this week, and maybe you guys can learn something from it. So before we get into that, maybe you can just take a look at what price actually did in this week, right? So, you know, let's see, that's Monday to Tuesday, pretty much a low volume kind of day. And then from Tuesday all the way to Wednesday, it was just that CPI push. And then from like Wednesday Asian session to London, and even pretty much the whole of Wednesday, it was just like a little retracement. Alright, then on Thursday we had the same, you know, push up but failed to break this high, right? You can see it was just a wick above, or like a liquidity sweep, right? Price swept these highs and reverse, but yet again failed to, you know, create some sort of structure here, and it just came back up here and to the end the whole week of the trading week, right? So as you can see, this week was pretty, it was, I wouldn't say it's the best, but it's also not the worst. I'm pretty sure there were opportunities to trade in this week, and I'm pretty sure that it could have been a profitable week for some of you guys. So let's just see, let me just show you guys like some of the trades that I've taken, right? So the first trade that I took was during Monday's New York session. So let's just get to it. Let's replay to Monday, New York. Let me just go down to the low time frames. So this is Monday's New York session from 9 p.m. to 12 a.m., right? 3 hours. So what I actually saw was that on the 15-minute chart, right, what we can see is that we've had this, you know, break of structure to the upside. Okay, on the 15-minute chart. Let me just indicate that 15-minute break of structure. And just before the start of New York, right? Let me just remove this. This is the New York AM session. Yeah, New York AM session. And we actually have seen that price had taken out these sell stops right here, this liquidity. Alright, and this would be, you know, sort of a signal for us to say maybe, okay, we can look for longs in this case. If price, you know, sweeps into a valuable demand zone or fair value gap, we can look to take longs to basically just target these highs right here, right? There's this high right here, there's also this high right here, like around here, right? So, or even maybe this 15-minute supply zone right here that we can target for longs, right? So when I'm looking left here, we can actually find like a little 15-minute demand zone right here, okay? And this 15-minute demand zone is technically valuable because it has created that bullish leg which caused the 15-minute break of structure to the upside, right? So when I saw this happen, when I see this mitigation into the 15-minute demand, right, the mitigation has happened, 50% of the demand zone has been mitigated. So I was looking for longs at this point. So I was looking for some sort of reversal, right? And on the 5-minute chart, okay, we could have seen a clear reversal pattern right here. So we can see pretty much price had sort of reversed up from here, and when I went to the 1 minute chart, there was actually this opportunity right here. So okay, what do I see right now? It is the exact same thing. This movement is the exact same thing on the 50-minute time frame. Can you see the liquidity creation and the sweep? Look at the 1 minute chart. It's the same thing, the liquidity creation and a possible sweep and the continuation of the uptrend, right? So at this point here, I identified liquidity for us to, sort of get in the trade, right? Wait for an inducement. And I actually saw this clean 1 minute fair value gap right here, right? So you could say that this fair value gap, there was like a 1 minute market structure shift at this point, and then there was like a 5 minute market structure shift at this point, right? So what I did was I took an entry at the fair value gap with my stop loss just below the low here, 4 pip stop loss. And basically where I want to target was basically just this 15-minute supply zone, because there is a chance that price will, might reverse in this 15-minute supply. We're not 100% sure, whether it will reverse or will just go straight up. But I think, this being a 1 to 4 risk to reward is pretty good. It's pretty decent. So I set a limit order here, buy limit with my stop loss below here, 4 pip stop loss. And then I got tagged in the trade here, and I just let this play out, right? So pretty much real quick, you can see, right, it mitigated the 15-minute supply and then reversed. So these things can happen, right, where you shouldn't be aiming for the stars, you shouldn't be aiming for like a 1 to 8, 1 to 10 all the time. Sometimes if you see a potential reversal point, it could reverse there. It's always a possibility. So that is why I took this trade, and I just take my profits at this 15-minute supply for a 1 to 4. Where was it? Around 857, 856, 86. Yeah, around here. 1 to 4 risk to reward. So this was a pretty good trade during the New York session of Monday, right? So the criteria were there. It's a pretty good trade. There was liquidity for for our entry. There was a nice fair value gap here for our entry here as well. And if you look at the high time frames, like the 15-minute, it's pretty much the same thing. We expected this, we've seen this 15-minute break of structure to the upside, which tells me that price probably wants to go higher and probably take out this high, right? Because we still are bullish on the high time frames, right? So with this liquidity sweep into the 15-minute demand, which is quite valuable, then on the 5-minute we see the trend shifting as well with this 5-minute market structure shift. Looking at the 1 minute chart, it's pretty much the same thing, right? We have like 1 minute market structure shift here, we have a huge volume push here from the 15-minute demand, liquidity to enter, off, and boom. So yeah, this was just one of the long trades that I took during this week. I'm not sure how long this video has been, so maybe I'll just wrap up by showing you guys maybe what you can do to improve on your edge, right? So ideally, when we're taking trades, whether it's long or short, right, people will say look at the high time frame bias, see whether there's break of structure, change of character and stuff like that. But I believe one practical way of identifying high probability setups besides like the high time frame bias is basically looking at whether are you in premium or discount levels. So just to illustrate, right, that long position that I took, it was within this this like range, right? You can say it was within this range here, and like, oh, your range trading, this is low probability or whatever nonsense, right? But if you take a look at it, right, is price really gonna just like whoom, like is it really just gonna whip and go past this range? No, there's a range here for a reason, right? And it's gonna break out of the range eventually, right? And you never know. But what made me want to take this long was like, okay, we see that there were lows here, right? And these lows were taken out by this wick. In essence, liquidity was taken with this move here. And after that, right, there's pretty much no more liquidity for the downside, right? There previously was liquidity here, price manipulated below this low, took out the sell stops, and pretty much grabbed all of the liquidity within this price area right here, right? So the only area of liquidity left are these highs, right? There's only liquidity left at this area right here. There's no more liquidity below. So that is why I'd say that, you know, taking longs here wouldn't be as low probability as compared to taking longs like when you're taking longs here, right? In this region, there's a high chance for you to get stopped out because why? You know, there's lows here, that's not be taken out, right? And also, if we take a look at this price action right here, all right, this high created this low, but this low didn't break anything. It didn't break this structure here, which also tells me that this is a weak low, right? And weak lows eventually will get taken out, you know, in the high time frame, right? Same thing. We see this high right here created this low here. It didn't break structure, right? Maybe on like the 4-hour chart, you can see much more clearer picture, right? This high created this low and then started reversing over here, right? Which it didn't break structure, it didn't break this demand, it didn't break this low, nothing. So this tells me that this is weak, all right? On the low time frames, this is also weak, which also shows that, you know, okay, maybe longs are better here in this scenario, right? And regarding the area of premium and discount, right, price, you know, is currently in this huge range. It's not going to break out anytime soon. So if I just take a premium discount level right here, right, ideally, if you want to take shorts, I will look for take shorts here. If you want to take longs, I will take longs in this area, right? This is discount and premium, right? This is premium, this is discount. So that is why, you know, I had the confirmation and the confidence to pretty much take this trade over here in this long position here, even though, you know, you could say there were pointers against us, like I don't know, maybe there was liquidity, right? There could have been this liquidity below us right here, but I believe because of like these confirmations, right, I took this trade pretty much. Basically the fact that we are in discount, as well as we have a weak high here and a weak high up there, right? And we probably can expect price to just retrace all the way up and continue. So that's pretty much it. So yeah, I hope you guys managed to learn something from this video. If you got any suggestions or any comments or whatever, just feel free to comment, right? If you enjoy this video, like this video, I appreciate it a lot. So yeah, that's pretty much it. So thank you for your time, thank you for your attention. I hope you guys managed to learn something from this video, and yeah, I'll see you next time.